Okay, so we're still in Chapter 11 for bookkeeping. Let's talk about the freight in account. This is called an adjunct purchase account. So it's added to the purchases. I will always debit it. And so this is the freight that I pay to bring the product into my store. It actually increases the cost of my product. And so we use a term called FOB, which stands for free on board. And there are two different ways to do this. All you need to know is who is responsible for the shipping. If it says FOB shipping point, I, the buyer, pay the charges. If it says FOB destination, the seller is responsible for the charges. And so in reality, you need to just know what method of FOB is it, which tells you who's responsible, but you also need to know who actually pays the freight. So let's take a look at transportation. So I purchased on account $400 plus freight of $38. And so freight in is a transportation cost, but I owe them a total of $438. So here's what it would look like. I owe them $438, but I break them apart so I know my true cost of product is $400 and my freight in is $38. Now, if they were on a separate bill from the transportation company, so let's say that the trucking company that brought me the product came and sent me a bill for shipping, then I would actually have to pay them. So here is the purchase. So the vendor sent me the product, and let's say they sent it via freight or UPS, but I owe UPS the money. So here is an example of where I'm going to have to pay them the $38. This would be the freight company. So it depends on how it's done. Usually you would actually really put it on your freight account number, and you would not get a bill for it. Okay, we next need to talk about something that's very important. It's called computation of gross profit or gross margin. And so there's some new terms. One is called gross profit. It's the difference between the net sales and the cost of goods sold. Well, the cost of goods sold, and by the way, it's also called cost of merchandise sold, is abbreviated COGS. And this is the difference between, and basically the cost of the goods sold is what was the cost of the product that I actually sold. So here is my information. Here's what I need to know. I've got sales, my sales returns and allowances, and my sales discounts. So here's how I would calculate all of my sales. Here are my purchases, returns and discounts, and freight in. And this is how I would calculate my cost of merchandise sold. And then I have my beginning inventory and my ending inventory. And this is really, really important. So let's get started on computing gross profit. First thing I'm going to do is take all of my sales minus returns and allowances minus my discounts. That becomes what I call my net sales. So this is part of the formula. It's going to be net sales. Okay, so it's sales minus any returns minus any discounts. Now the next thing, because I want the difference between these two, that's what my gross profit is. So now the goods available for sale, I'm going to start with, this is important, my beginning inventory, so what I had on the shelf to begin with, plus what I purchased, okay, equals my goods available for sale. Now, in reality, hold on, let me see. This is a little bit different. In reality, my cost of my goods purchased is often offset by my purchase returns and my purchase discounts. So let's move on. We're going to show it in a minute. Okay, so now I have the cost of goods sold. That's what this means. So goods available for sale minus my ending inventory. So basically, it's what I start with plus what I buy minus what I sell. I'm sorry, minus my ending inventory, what's left is everything I sold. So let's take a look at it on the next slide. Here it is. So here, notice I've got like 4 columns here. So I start with my Here's my sales minus my returns and discounts equals my net sales. My cost of goods sold, I start with beginning inventory plus what I purchase minus my discounts and returns equals my net purchases, then add freight in. So I'm adding these numbers here. So here's what I start with. Then I need to add in cost of goods purchased. So this is all the goods I have available for sale minus what's left tells me how much I sold. Minus my net sales will tell me my gross profit. This is extremely important information. This is how you know whether or not you are profitable. Please make sure you understand this formula. So this concludes this video for chapter 11, which talks about gross profit, and this is video number 3.